Hello YouTube, Tim Erickson here. Welcome to my first official video for my new investing challenge. We're trying to turn $10,000 into $100,000. Starting off on Robinhood. As you can see here on my screen, I have loaded up $10,000 into my account. It is all in cash. And we're going to start off this video today with our first initial buys, all the stocks we will be buying. As mentioned in my intro video previously, we will eventually be talking more in depth about the options trading that will be the larger part of the platform. But in order to take advantage of fully leveraging our portfolio, we're going to first start off by acquiring a good mix of stocks. I'm going to focus both on some higher yielding dividend stocks as well as stocks with a little bit more growth potential. But also, as previously mentioned in my video, you'll see as the stocks I'm picking might not be some of the more popular names out there. I'm not going to include any meme stocks or anything like that. I like to follow what I call the Shark Tank approach to investing, which is I care about valuation a lot. So you who watch Shark Tanks know anytime there's a ridiculous valuation, the sharks stay away from it. So I try and do the same thing when I'm picking stocks. Anyways, I have preloaded up here a watch list with some of the stocks that I'm going to be starting the challenge with. I'm sure as our portfolio grows, we will be adding more to that, and in subsequent videos I may decide to do a little bit of a deeper dive into why I like some of these stocks, but for now I'm just going to kind of give a real quick summary overview of each, as well as start placing our orders. So I'm sure most of you are already familiar with the process, but for those of you who aren't, I wanted to at least have the first video be a kind of in-depth walkthrough, and if you are wanting to sign up to try investing for yourself, I will post a link in the description below for a referral code where you can sign up Robinhood and get a free stock. So let's get into our investing. So first off, as you see here, I've picked 8 stocks to start my portfolio with. Again, as I said, a mix of some higher yielding dividend stocks as well as some with a little more growth potential. The reason I'm going for that mix is because later on I will be applying leverage to the account, and so I do want to pick stocks that aren't too volatile, just because, trying to minimize our risk of ruin here. Anyways, starting off here, the first stock I've chosen here is McKesson. Now, this stock has enjoyed a run up recently. A couple weeks ago, you could have bought this closer to 170, which obviously would have been a great entry point, as you can see here, if I click down on the 1 month chart. But I do still think that this stock has a good growth potential today, just given its current PE ratio. Robinhood's not the best at keeping updated this information down here, but I believe this is trading somewhere close to a 10 PE ratio right now, and it has historically been growing its earnings in the double-digit percentages every year. So it's a very fast-growing stock. One of the reasons why it's one I'm happy to include in my portfolio. As I've picked eight different stocks, I'm going to try and buy an amount that equates to close to $1,200 per stock, give or take a little bit, just so to round out our full 10,000. But as you can see here, if I buy 6 shares, it's estimated to cost me a little over $1,100, so that's what we'll be starting with. The one thing I will mention is I do always recommend using limit orders for your purchase and not market orders. Just, I find you tend to get better execution prices. You don't want it to execute above your limit, so I'm going to go ahead and enter the limit price of what it's currently showing me as the market price. Say, give me 6 shares. Hopefully this will execute relatively quickly, and we will see. So as you see here, it's letting you know exactly what you've entered. We'll let that wait a minute, see if it executes. If not, we can go in and adjust our limit order. So moving on, this next stock is one that a lot of people might consider a little bit more of a risky investment. AGNC Investment. This is what is known as a mortgage REIT, and a REIT, that's REIT, that stands for Real Estate Investment Trust, and mortgage REIT meaning that this one invests mostly in residential mortgages and mortgage-backed securities. The way these REITs tend to make money, and why a lot of people view them maybe as a little bit riskier, is what they really end up doing is they employ a lot of leverage. So they borrow money for short terms at very low interest rates. They buy all these mortgage securities that pay a little bit higher interest rate. And the spread in that interest rate is basically how they make their money. So, um, if you look at the long-term charts for a lot of mortgage REITs, you will see a pretty bad downward trend where they didn't really make people a lot of money, at least in terms of capital appreciation. They do kind of offset that by paying really high dividends. This one pays 12 cents a share monthly, so $1.44 annually, so pretty high dividend yield. This says 9.47. I don't think that's quite updated for the current price. I think it's probably a little under 9% now. But regardless, one of the reasons why I'm not as afraid of these stocks today as in years past is several years ago, prior to the 2008 recession and all that, interest rates were considerably higher than they are now. And as interest rates trended downward over the last decade or so, that interest margin spread that they would make kind of shrunk, which really shrunk their ability to generate a profit also. So the reason why I'm not as concerned about that trend continuing is because we've been kind of at a period where interest rates are at historic lows and have been for a while. Now, the Federal Reserve intends to keep them low for a while, but I think unless there's another huge revision downward, I don't see it being a huge risk to stocks like this. Even at the historic lows, at their current prices, they were making a lot of money. So this one we're buying mostly for the yield, and if interest rates do increase over time, I would expect some pretty significant appreciation there also. But this one, as I mentioned, is one we're mostly purchasing for the yield because it pays monthly dividends, and like I said, it's paying 12 cents a share, which is a pretty good amount. So I'm going to start off with buying 70 shares, and I'll go ahead and just make my limit price the market price again to give me just under $1,200 like we talked about, and we will place this order and hopefully get on to the next one. So if we go back to our home screen, you can see our McKesson purchase actually has executed. We now have 6 shares. This one is still showing pending, but that's all right. We'll move on. So moving down our list, next here we have WP Carey. This is another real estate investment trust, although this one actually invests in real estate, not in mortgages. They are very diversified. They invest in all sectors, basically, of the real estate market, from industrials to office to retail, and basically pretty well spread out. They're also pretty well diversified between both the United States and Europe. This is a company, again, that we are mostly buying for the yield and because it is one that shouldn't be quite as volatile. This real estate investment trust in particular is one that weathered the COVID-19 pandemic and crisis very well. Some real estate trusts did not fare so well, where their rent collections plummeted, where they were lucky to be collecting half of what they were due. WP Carey never really dropped below collecting like 96% of what they were due. So they have very high quality tenants, and they're very well diversified. They are yielding about 6% or so, give or take, today. And again, it's one that I think is a very good buy. I think the stock price, if we were to wait a couple weeks, might dip down a little bit, because here at the end of March, they do have their dividend date coming up where they pay over $1 a share per quarter. But this is one that we're buying mostly for the yield, a little bit for stability. And we are going to start off with our 17 shares. I'm going to make myself a limit order. I really do want this one to execute. I'll enter my limit price a penny above the market price just to see where we get, but I am going to go ahead and place it. Look at that. We actually executed a few cents below at 68.98, so that's always nice to see there. Save a little bit there regardless. Anyways, moving on, you see here our agency is executed. The previous screen said this one executed, so I'm sure that'll update soon. But moving on, next we have Lockheed Martin. This is a defense contractor. They build the F-35 fighter jets, as well as attack helicopters and other things like that, with obviously the U.S. government being their biggest customer. They do also sell, some things to allies of the U.S. the government lets them to, as well as I'm sure, they have a few commercial products as well. But again, their main driver is the U.S. government. So this is one where, again, if we had bought it a week ago, we could have gotten a lot better price, down closer to 340. But it is one that the long-term output, I think, is very good. As you can see, if you look at the 5-year chart, we are still well below its all-time highs at almost $440. And this is another one that has been growing their earnings at double-digit percentages per year. They do pay a dividend of around 3%, which they also do increase, annually on a pretty good amount. So this is one where if you just look at the long-term chart, if you had invested $10,000 in just Lockheed Martin 20 years ago and held it to today, you probably would have made 10 times your money, if not more. So, and in a later video, I'll maybe show the exact breakdown of charts like that. But just given the United States government's love for spending money on defense and things like that, I think this is a good pick. Reading their earnings reports, you also hear that they, have a 2-year backlog worth of orders, waiting to be filled. So I think it's one where the long-term prospects are great. It is an expensive stock, coming in at $358. Their dividend's $2.60 quarterly per share. I'm going to start off with 4 shares, which puts me a little over the 1,200 number, but that's okay. And we will hopefully, be able to add to this position over time. But because the stock is so expensive, I find the bid-ask spreads can be a little bit wide on the pricing. So I might actually enter a limit price slightly below the market price just to see where this will execute at. But let's go ahead and place our order and wait and come back and hope it executes soon. All right, on to the next one. We have CVS. This is, again, another one where a couple weeks ago we could have bought it at a much better price, but I still think the long-term growth looks promising. They've been growing their earnings very rapidly, and do pay a small dividend also. I'll start with about $1,200, which is 16 shares. And we will go ahead and place our limit order. And since I'm sure most of you are familiar with this company, I won't dive too deep into them right now. But again, like I said, a future video, I might do a more in-depth analysis of all of these. But for now, I just wanted to get our orders in so we can get on to the next video, which will be starting our option trades, which is the meat and potatoes of our strategy here. So that gives us our CVS. Scrolling down to next, we have BMY. This is Bristol Myers Squibb. They are a pharmaceutical company. They're one where their current valuation and PE ratio is very, I think, attractive. Trading down that close to that 10 PE range. I think, the market has kind of punished stocks like this recently because of the whole opioid epidemic and crisis like that. But as the dust settles on that and settlements are made, I would hope that a stock like this should have some good recovery potential. So currently trading just under $63. I think if we start off with, I meant to do 20 shares there. So we'll go ahead and place our limit price, 20 shares, review our order, and click buy, and on to our next one. As you can see here, all of our other trades have executed with the exception of that one yet. Hopefully it does soon. Next we have Oracle. This is a tech stock, but it's not one that has the same crazy high valuations as a lot of the newer ones, and probably because this is actually an older one. They've been around for quite a long time. They have been in the process of kind of transforming their business model to offer more cloud services and things like that. But trading about a 15 price to earnings ratio today, and does have a pretty good history of long-term growth and whatnot. In their recent earnings call, they also announced a huge buyback program as well as increasing their dividend by 33%. So one that I'm hoping will, pay lots of returns in the long run also. So we'll go ahead and enter our limit here, and this one, let's go for 20 shares up as well. And on to our last stock for now, which is going to be AbbVie. This is another pharmaceutical company. It's one who actually just yesterday the price took a huge dive, so I'm definitely happy to be buying today instead of yesterday, although I probably still would have bought it yesterday for my own investing. They took a big hit yesterday because the FDA recently announced an extended review period for one of their new drugs. So I guess it's the risk or uncertainty that maybe they don't get that approved. But in the meantime, it is a company that with, again, a very long history of earnings and earnings growth, as well as paying almost a 5% dividend. So this is another one that I am going to invest in for the long term. Many of you are probably familiar with their flagship product, which is actually Humira. I'm sure you've seen non-stop commercials for that one. I believe they also recently acquired the company that produces Botox and things like that. So a lot of household names. Humira, the main concern there is that they do lose their patent protection in a couple years, but if you listen to or read their earnings reports, their management believes they'll have pretty good alternatives already in line for things like that. So let me check on my Oracle order here. It doesn't look like it has executed. I did a limit price of 66.73, which is about where its current price is. So I guess we'll wait and hope that executes soon. Everything else has executed, as you see. So I guess just in interest of wrapping up this video, I might come in and cancel this order. I'm going to replace it with a higher limit price just to get it to execute so we can wrap this up. So I believe I said I was doing 20 shares, and this should, as the price has now dipped, this should definitely execute. Now, there you go. It executed a previous limit price. All right, so let's see where this leaves us. This actually leaves us with $42 cash left over, so that gives us enough that if we wanted to, we could come back and buy a few more shares of AGNC. And, just for the sake of rounding out our initial $10,000 investment, I think I will do that. And then in subsequent videos, as we get more money to invest, we'll look to add to these positions as well as maybe open some positions in new ones as well. But for now, let's go ahead and buy 2 more shares here to just get our round out our initial $10,000 investment, and that should fill out our initial positions. Again, here they are. Now, as I mentioned, these are stocks that I am choosing to invest in because of the research I have done. I am not a financial planner. I'm not recommending everybody else go out and buy exactly what I do. The purpose of this channel, as mentioned in the intro video, is to try and demonstrate more the general strategy that I use so that you can, learn how to apply that strategy yourself, but you'll be making all your own picks, right? So the thing I stress the most is always do your research on the stock, pay attention to their valuation, read their earnings reports, pick stocks that you believe will have some good long-term growth potential. And then from there, in the next video, we'll get into our options trading. So again, this is Tim Erickson. This is my $10,000 to $100,000 challenge. As you can see, the stocks we have purchased, we've already gained a little bit of appreciation. And hopefully this trend continues. I'm sure there'll be some down days along the way, but looking forward to taking this journey with you guys. So if you enjoyed this video, I would appreciate it if you would please leave a like as well as subscribe to the channel for future updates, and leave a comment below if you have any other stocks you think it might be worth me taking a look at, or anything else. I will be engaged in the comment section and looking forward to taking this journey with you guys. Hopefully we'll see how quick we can accomplish this, but 10,000 to 100,000 challenge is officially off and running. Until next time.